Hey, good morning, everyone. Welcome to Midwest Market Solutions, our Market Insider TV commentary on Monday, March the 26th. Thanks for joining us. This is Brian Hoops of Midwest Market Solutions. We're going to talk about a lot of news over the weekend that has developed, a lot of our calendar coming up. It's going to be a short week, but a busy week. So let's take a look at what's going on here. Thursday, the 29th, USDA will release a quarterly stocks and acreage report at 11 o'clock Central Time. We've got a chart of all the stocks estimates, high, low, and average, as well as acreage estimates in our daily newsletter that went out earlier this morning. So if you want to get all the information that's available every day sent to your email box to read through, this is a great way to do that. If you're not signed up for it, contact me and get signed up to receive this news. But looking for average trade guess is for less than a million acre increase in soybean acres, and from talking with clients and producers around the country, it certainly sounds like it'll be more than that. Coming up on Thursday, the 29th as well, quarterly hog and pig report will be released. Now, the time so far has been announced at 2 o'clock Central Time, and I think that is possibly subject to change as there is no markets on Friday because of Good Friday. That means you will not be able to react to it until Monday morning. Now, in this case, a lot of times the USDA will change the release time to a morning time slot, 11 o'clock, 12 o'clock, so there is time to trade or react to it. But so far that's not been announced still publicly. They've kept this 11 o'clock Central Time, but let's keep an eye on that, and we will update you as we get the information. We'll pass it along. This morning, export sales 120,000 metric tons of soybean meal to Spain and 132,000 metric tons of soybeans to an unknown destination were announced. So there are a couple private sale announcements going to give us a little bit of firmness. Now you look at the beans and the meal overnight, we're already stronger. We had an outside day higher on meal on Friday, giving us some follow-through strength. Soybeans also following the lead of that meal should see a little strength near the opening. Question will be is can we take out the overnight highs in both these markets and extend those gains? And finally, cattle on feed report came out Friday afternoon. This will be the first reaction, that the first chance the markets have had to react to it. On feed supplies came in a little bit above estimates, but still, this is a huge number. It's the largest supply since 2008 and a million more head than last year. So I know from talking with people around the Midwest, when they're talking about their hedging strategies this year, they talk about this wall of cattle, how it didn't appear last year, and so they don't think it will appear this year. People, there are a million more head out there right now. The key will be what weights do they get marketed at. Last year we kept the weights down. We're aggressive in our marketings. We're starting to see some evidence of that, but really our weights are very similar to last year, so we've got to keep aggressive with our marketings. But that's big number, big supplies. Placements also large, 7% larger than a year ago, and marketing's 1% more than a year ago. I think that's the third slowest marketing of the last 10 years, to be exact on that. So got to keep aggressive with this. Cattle, I don't think, fall out of bed off of this news. A lot of it's in the market already. Stock market is trading higher. That's a positive. And the fact that we traded a lot of this news on Friday going into the report, I think says a lot that we should find some buying interest off of this lower opening in the cattle. All right, that's what we've got going for you for today. We hope you have a great day of trade. If you have any questions, reach out to any of our locations. They'd be glad to assist you. This has been Brian Hoops from Midwest Markets. Talk to you again.